Welcome, and welcome back to Listen to the Market for Friday, February 10. The message from Thursday's price action, viewed through the eyes of the L.I.V.E approach, presented two messages for trading on Friday. The first message was, be mindful of an impending top, and the second message was, probabilities favour the sell side. So going into Friday, those two things came together, a top and taking shorts. The first shorting opportunity came along early in the day, my day here in Vanuatu, around midday. Statistical and historical analysis of the L.I.V.E setup performance shows that 72% of profits come between 7 p.m. and 2 a.m. my time, again here in Vanuatu. That's not to say that outside that time window the rules are not profitable, but what it does say is the top-down approach doesn't perform as well outside that time window. With that in mind, the way I get around that is rather than zooming down all the way down to a 15-minute view for the action points, I simply apply the top-down approach with a combination of the 60-minute, the 1-hour view, and the 30-minute view for action points. So the first setup that came along, known to the L.I.V.E students as a fake-out dip, is a combination of two setups. And simply put, you're looking to go short on the break of the low on the hourly chart of that bar there, with the ISL at the high of that bar. The top down provides for a better entry point on the break of this low, with the ISL at the high of that bar. The selling setup there is a retest variation sell of the previous high, as well as a regular retest sell. A simple trailing stop loss above the highs of each 30-minute bar shows you clearly that you could have very easily locked up more than a 1-hour return on that first campaign, going short in the 30-minute chart on the basis of the 60-minute giving you a sell setup being the fake out dip. Now let's zoom fast forward to the major opportunity of the day being the sell. Excuse me. The 60-minute view provides a GORB setup, again known to L.I.V.E students. The 30-minute view provides a fake out second bar reversal down sell setup, so confluence. However, the 15-minute view does not provide a selling setup, so one has to exhibit patience to wait and wait. One 15-minute bar goes along, still no selling setup. Next 15-minute bar goes along, still no selling setup, which means the 30-minute bar is now complete. The top-down approach dictates 60 minutes, provides a direction. She should be confluenced by the 30. In this case, there's no confluence, so we're not looking for any setups at all until the next hourly bar is complete. The next hourly bar is now complete. The hourly bar is a retest variation sell of a previous high surrogate. The 30-minute bar is a retest sell of the previous high, so we have confluence. And the 15-minute view now is also a retest variation sell of a previous high. So very cleanly again, by waiting, the top-down approach gave us a 60-minute sell, 30-minute confluence, 15-minute action points. Let's see how that unfolded. Entry is the low of that bar, ISL is the high of the bar, risk factor there less than 10 pips. Entries achieved on this bar, lower high, lower your stop loss, almost break even, not quite. Next bar comes along and we're stopped out. We've got a loss following the top down approach. What gives? Nothing's perfect. Let's look at the next 30-minute bar to see what we have there. We still have the retest sell variation surrogate on the 60. We now still have a retest variation sell on the 30 in confluence with the 60-minute. And the 15-minute is now a regular retest sell of a previous high, entry on the break of that low, ISL on the break of that high. Easy do. Entries achieved, lower high, lower lows. Simply lower your initial to a trail for 1 bar, for 2 bars, and now we're at break even. The 30-minute view by now is such. We've broken the entry point on the 30-minute. We've broken the spike low, which is a spike low in there on the 15. We're at break even, and the rest will be what it is. This campaign then continued merrily to the south side, all the way down through there, and then the final stop out on that bar there. So you can clearly see the top-down approach is not perfect. It provided for a loss in through there. The projection from the previous day does filter out trades rather well for you. So I trust you've learned something from all this. Catch you next time.